Yeah, I think it's becoming more and more important to have really like a very good understanding of what are all the costs involved in a transaction for your business on each channel. The better you understand that, the better you can predict it. And if you can predict it, you can then use that to make a decision in the right direction.
Hello and welcome to another episode of the Ecommerce Coffee Break podcast. Are your prices driving profit or just more sales on lower margins? A lot of brands still rely on simple pricing rules or gut feeling, and that's where margins really quietly disappear. So the question is, how do you set the right price for every product you have? To break this down, I'm joined by Felix Hoffmann. He is the co-founder and CEO of 7 Learnings. Felix previously led global pricing optimization at Zalando and now helps brands use AI to improve pricing, profit, and growth. So let's get started. Felix, welcome to the show.
Thanks for having me.
Felix, many brands still use simple pricing rules. Why is that a problem?
Yeah, one, it's a problem because the world is becoming more complicated. And if you're using pricing rules, you probably have quite a lot of them. So there's complexity that you have to manage, especially in this world of marketplaces. There's more and more marketplaces which have different setups, different costs. So you are going crazy with complexity if you're only using rules. And the other thing is that it's not going to be optimal, right? The question is always like, what rules should you use? Even if you have crawled the entire internet, what everybody's kind of doing. Yeah, then what are the rules that you should be using? And I think that's the problem with rule-based pricing.
Mm-hmm. Now, a lot of beginners in e-commerce, they just look what the competitors do. And obviously that's an issue. What's the problem with matching your competitor prices?
It's like we're saying it with the words of Frank Bischstein, is the blind follows the blind, basically. Yeah. So, and it's also the race to the bottom. You could also say that, right? So if everybody's doing that, and especially if you're undercutting your competitor, then you're kind of destroying the market in a way. And also you're not enough checking like how much would you be selling if you would be more expensive a little bit, and then even. Nobody can match the lowest price in their market. Nobody can really afford that. And that's not really the best strategy for anybody, I think, not even Amazon. So even Amazon or Zalando, they all use predictive pricing to understand if I am not following the lowest price, what would it mean for that specific product? Does it look okay for my product? Because maybe I don't even have enough stock, and then it's fine. This is what you have to analyze. What are the options outside of matching? That's important to check if you want to be profitable.
Mm-hmm. Pricing is such a complicated topic. So I'm really interested in learning more about this. And you were at Zalando, which is obviously a massive company and have a good background in this. Now, there's a lot of things, and you already mentioned a few, is when it comes to pricing. Now, AI is coming into the game. Is that a game changer when it comes to pricing, or is it just another tool that you add to what you already have?
Yeah, I think the game changer is that we have really unlimited compute. So there's a lot of computational possibilities, which we didn't have before. And there's also a lot of support from models, which are open source developed, which you can use and which you can use to make these predictions. And in my opinion, what we're doing is called predictive pricing. And the idea is really to predict what happens if you are matching your competitor, what happens if you are undercutting, what happens if you are maybe 5% more expensive, what happens if you're 10% more expensive. So it's really making predictions on a very, very large scale, billions of predictions basically every day, today already. And that's just possible with like the new cloud infrastructure, the hyperscalers and open source models that wasn't possible before.
Mm-hmm. Let's dive a little bit deeper into that. Obviously, at the end of the day, as a merchant, you want to make profit. I think a lot of businesses out there presenting themselves, they're only talking about revenue and they're talking about their profit. And I think that's a bit of the wrong angle if you're running a business. What are the levers when you do your pricing strategy on really make sure that you make money at the end of the day?
Yeah, I think it's becoming more and more important to have really like a very good understanding of what are all the costs involved in a transaction for your business on each channel, right? So there are logistic costs, there's commission costs, there's return cost, outbound cost, marketing cost, and then there's especially in marketplaces a very difficult cost structure. And the better you understand that, the better you can predict it. And if you can predict it, you can then use that to make a decision in the right direction. So That's the idea. And the problem is that this is true for like Amazon, for eBay, for Zalando, for About You. They all have different cost structures, and you need to try to understand, okay, where should I drive my sales? And the other thing is that you can also try to understand if I want to grow 10%. That's the other thing that predictive decision making brings for you. If I want to grow 10%, where should I invest my money to grow 10%? Should you sell more on your own channel? Should you sell more on Zalando, on Otto? Where is it best to invest your discount, for example, or where is it best to invest your marketing money? And that becomes more and more important because of these complexities of multi-channel sales.
I like that you said that marketplaces, everyone charges differently, different fee structures and so on, so forth. It's already difficult enough when you run your own store with all the costs and fees and app fees and whatever is attached to get it right now. For our listeners, obviously, they understand there is many moving data points in a business. What are the main KPIs you would look for to start optimizing?
Yeah, so most important data points we are using is the transaction file. And we're looking for kind of really broken down transactions, trying to understand, okay, what for each sale you did, what were exactly the cost on that specific transaction. That sounds easy. Everybody, I talked to the CEOs in the beginning and they say, yeah, I have that data, no problem. But in the end, if you really ask for it, I mean, who really knows, like, what was the marketing cost, for example, on a specific transactions? That's a very difficult question. But these are the type of questions you need to try to answer in order to optimize. But of course, you can start with logistic cost, and the costs I just mentioned. And then next to the transaction cost, there's of course also attribute data because we want to also learn across products for your business. So we want to know how, like, we want to make a prediction for returns, even if you've never sold a product, as an example. Or we want to understand what is the conversion of a product, even if you have never sold it. And for that, you also need to understand, like, what are similar products. And that is what you need attribute data for. So what is the product category? What is a brand name? Yeah, name of the product, sizes, and that kind of stuff. Yeah, and we also mix in, of course, data like weather data or competitor data as well. Yeah, so it's quite a lot of data used actually in this approach. And you could say, in short, the more data, the better your prediction. The more accurate is your prediction, and the better your prediction, the better the outcome of the optimization.
Okay. I was surprised to hear weather data, but in a sense, it makes sense because if you're selling some seasonal products, the weather might have a huge impact on your sales. Now, when it comes to different marketplaces, would you recommend to have a different price for the same product on each and every different platform and marketplace, or how does that look in real life?
Yeah, I mean, if you have hundreds of marketplaces, that's probably too complicated. So we also support aggregation of marketplaces. So you can say, okay, I want to have the same price on marketplaces which have similar cost structures. Zalando itself has, I think, 27 different markets. So you might not have to have a different price on each of these markets because the cost structure in terms of commissions, at least, is very similar. So, I think the best practice here is really to aggregate these marketplaces so that you have similar cost structures. But for example, on your own channel, the cost structure is very different, and also the elasticities are very different. And for example, return rate for a fashion item on Amazon is 30%. The return rate on Zalando is 60%. That's quite a big difference. So this is what I mean when you need to consider the differences of these channels. To make sure you're making the right choices.
Mm-hmm. Can you give an example of a brand or a case study that you worked with, and you don't need to name them, just to give an example to our listeners how implementation of AI helps with better pricing and what kind of increases you see overall?
Yeah, we work with large fashion retailers. We typically do like 3 months onboarding. In the beginning, you get all the data. We're working about 1 month on the prediction quality because, as I said, quality is everything. If you have high quality data, then you just have much better results. Yeah, and then in the third part of the project, we are doing an A/B test. There's at the moment a lot of discussion, of course, on like what is AI actually delivering in terms of impact, and we typically still measure that in the third part. Not always, but in many cases. These A/B tests are also on our website available. So some were like quite impressive, like for Galleria, for example. We had like very, very high uplifts. I think even more than 100% profit uplift, something like that. You can look the exact number up. Outlet City, for example, was just kind of 29% uplift in profit. So the uplifts are very, very high. So I would say the biggest lever for everybody in e-commerce, if you have already bought your stock, is definitely pricing. It's the number one lever if you want to improve your profit. It's definitely pricing because you already have your stock. So the question is like, how can I get most of the money out of that stock? And it's not to make that distinction. It's not only short-term profit. It's not only like how much do you make tomorrow or the day after. That is one aspect of it. But it's also about long-term profit, like including the entire season. How can I make most money out of the entire season? Because it's also not making sense, of course, to sell out on a crawled price, for example. And then I've seen that all the time, basically. People do price matching, then the entire market at some point is sold out on a specific SKU. And like, what is the benefit of that in the end? Yeah, that doesn't make any sense. In that case, it would have been much more useful to actually increase prices in between and just have a higher margin. Or the other, I think what's also happening in fashion at the moment, there's a lot of overstock in some companies, and that also doesn't make sense. In this case, it often makes more sense actually to reduce the price early on in the season to sell off that overstock, because it's better to have lower profit in the short term than all that overstock at the end. And these are really complicated calculations that a typical brand normally doesn't have like experts to do, or the capacity to do that even. And that's what we're helping with.
No, definitely. I can see the advantage of AI there. Now, some people might have concerns and say, if I leave my pricing completely to AI, can it go out of hand? What are the risks there? What are the control mechanisms that you have to not have that happen?
Yeah, but you can, I always love to compare us to Google Maps, right? So if you want to go from, like, I'm in Berlin today, I want to go to Munich next week, actually. And I just say, okay, I want to go to Munich, give me an itinerary, how could I get there, right? And then I still check it, right? So AI is actually optimizing that, or it's definitely optimized. And I still check kind of, and then I make a choice which one I want to use. And it's a similar thing than in our case, right? We make predictions for what are your options. We are then making a suggestion and say, hey, this is what we would suggest to do. And then you can still check it. You can still review the scenario and then make it your choices. And you can override the decision as well. So we are basically, I don't think there is a perfect price. There's just a perfect setup for what you want to achieve. And you can, for example, say, okay, I want to match all my products to the lowest market price. And then you get maybe another scenario for maximizing profit. The results will be extremely different, right? So as I said, in the short term, the power of pricing is just unimaginable, right? It's completely different numbers. Probably you have a lot of revenue if you are matching the lowest price. But in terms of profitability, the results are vastly different. I'm not saying you have to do it this way or the other way. I'm just saying, like, you should look at both options, and then you can make a choice which one you should choose. So our opinion is not making kind of like turning it on and say, okay, it's the black box and makes my pricing now automatically. It's more like you can use it to make better strategic decisions based on scenarios, which we calculate for you.
I'm curious to hear from you, and you don't need to give away your company secrets, your AI secrets, but obviously working on your own data is one thing, but still there's competitors on the marketplace there, and there's marketplace prices. How do you train the AI to follow the same product or similar product of a competitor and to find out what prices they have? Because I think it's important still not to match your competitor, but to at least know what your competitor is charging.
Yeah, I mean, we know that from crawling, right? So we don't crawl ourselves, but we have partners who crawl for us. And then we're using that price as an input into our machine learning models, which then predict and know that the elasticity of demand is most elastic around that price. So that's how we use it. So we know that you will sell a lot more if you are matching, but we also know that you lose money at that price. So that's how we do that. Yeah.
Okay. You spoke briefly about the onboarding process. So there's a bit of a training time or period involved. Talk me through it. How does it look in real life? If a brand approaches you, what are the steps to get up and running?
Yeah, well, it depends a bit on the data maturity, I would say, of that brand. So, yeah, if you have very mature brand, they can onboard actually in 1 or 2 days, I would say, which like a brand with perfect data, let's say that. Yeah. So, yeah, our data requirements are really public. You can download the requirements and you can see that. As I mentioned, typically brands think that they have very good data, but then when they start to work with us, then they realize there's some problems in their data, and we typically in the onboarding phase have to fix that data quality issues first to increase the forecast accuracy. So that again takes typically 4 to 6 weeks, I would say. But there's also cases where we were much faster. So there's basically a quality gate in the beginning where we have hundreds of tests running who check your data quality, and we make sure that it's really perfect when it gets into the prediction stage. Yeah. And then pretty early on, after 6 weeks, you get access to your front end where you can run optimizations, and then you can start using the tool. And also customizing the scenarios which are interesting for you. There's different targets you can use. Again, one of the biggest advantages is target steering, what we call target steering. It's this thing saying, okay, I want to grow 10%. How do I get there? You know, that's you're not steering with rules, but you're steering with your financial goals. And that's also typically a new thing for many of the brands that we onboard.
Mm-hmm. That's a tempting feature. It's like, I want to scale by 500%. How do we get there?
Yeah, but you can see also the trade-off. Yeah, that's the thing. We also show directly in that app the trade-offs. I mean, if you grow 10%, that means your margin goes down. It means you need maybe more stock, which you have to order, right? So all of that is also there. And then you can make these trade-offs because there's no free lunch. Yeah, of course, sometimes you can actually really improve revenue and profit. That's also possible, but many cases, it's a trade-off between short-term, long-term profit, for example, or short-term profit and sales rate. These kind of trade-offs, which are common in e-commerce, I would say. And I think when you make these predictions, these trade-offs are just more visible to the companies, and that helps them make better decisions, which are carrying them better in the long term.
Yeah, I love this transparency that you see is like, if I do A, B will happen. So really you can make an educated decision if which route you want to go. Who's your perfect customer? What kind of brands do you work with?
Yeah, so we work with brands starting at 25 million turnover a year. So yeah, for Germany, it's bigger customers. I mean, we now also went to the US, so there it's still a pretty small customer if you have a 25 million turnover. But that's more or less the gate, because it requires a certain amount of transaction data to work well. And then, yeah, we started in the fashion industry, but we also have customers in automotive, spare parts, or pharmaceuticals. It works for everything that is sold, I would say. Also works offline, especially if you have ASLs. You can use it offline as well. And I think it will be more and more also used offline. Yeah, of course, offline, typically your elasticities are lower. So you don't get as much benefit often, but it's still becoming more important because people are checking the prices. And if you are trying to sell an electronics product at a super high price offline, it just won't work.
That makes perfect sense. Obviously, everyone is checking in the store if they can find it cheaper online. So cheating doesn't really help you there because they will find out anyway. You mentioned that the onboarding process, the data quality. I want to just touch on that one before we leave. So what kind of homework does a merchant need to do before they can get started or before they should approach you?
No, I think really we help them with that. So, I mean, they can download the data requirement and look at it. And again, most people say, hey, we have that data, and I think they have it. But yeah, I think what I see on the pricing product is really this attribution to transactions, what makes things difficult. Of course, you know more or less your outbound cost, but do you really know it exactly on each transaction, right? That's often difficult, but it's important. And then we also do marketing optimizations, right? I mean, performance marketing optimizations. And there, again, it's the attribution. Like how do you know which campaign drove actually which traffic and ultimately which transaction? that's kind of the most important question. I was surprised. I came from pricing, right? And I thought, okay, data quality is poor. But yeah, I mean, wait before you go to marketing, and it's just worse, far worse actually, in marketing side. So you generally have that type of data we're asking for, but especially the attribution maturity is very different across companies. How are you able to attribute the cost that you have with the benefit, which are basically the transactions? And some are very good at that, and some haven't even started.
Mm-hmm. Being in digital marketing for more than 25 years, I'm completely with you. Digital marketing attribution when it comes to conversions is really the holy grail because it's so unreliable. Felix, before our coffee break comes to an end today, is there anything you want to share with our listeners that we haven't covered yet?
One more reason I think why you should get into that is really that we also have to understand where the whole e-commerce segment is going, right? I mean, there's more and more marketplace revenue coming, more and more marketplaces in itself. And I think also customers get more and more help making decisions automatically or getting support on their consumer decision. So I think it's a very natural thing for retailers and brands to also use AI to improve their own decision making, because this is really what it is all about. Yeah, it's about making better decisions for pricing, for marketing, also for ordering. And I think it's not an optional thing. It's not like you can say, I might do it at some point. So it's really, you have to do it. I think it's like the big ones are already doing it, right? I mean, I think there was also a big story about Walmart going big times into that topic. Amazon has been doing it for a long time, Zalando as well, for more than 10 years. I think the big successful players in e-commerce are already doing it. And I think if you want to get support and be successful in that new agentic world, you also need to start working on that.
Yeah, and your solution definitely helps with that. And I think it just opens the doors and the opportunities for smaller brands to use the same solutions than what you just said the big brands are using for a long time. So it levels the field to a certain degree, and everyone has the same chances to win the customer. Where can people go and find out more about you guys?
They can approach me on LinkedIn or just find 7 Learnings on LinkedIn, or just go to our website as well, book a demo. We also have frequently webinars where you can get in touch. Yeah, these are options, all good for us.
Cool. I will put the links in the show notes, then you're just one click away. Felix, thanks so much for giving us an overview on pricing. And I agree, pricing is the easiest lever if you do it right to get more out of your business. And your solution definitely helps with that. Thanks so much for your time today.
Thank you, Klaus. Bye-bye.